What's up, everyone? This is kind of random, but I was gonna be watching the 2023 mentorship anyways, and I thought, well, if I'm gonna be watching it anyways, might as well stream it in case anyone else wants to watch it with me. But yeah, I'm on episode 2,
Have you ever wondered how
so yeah, I've never seen this before, and I just finished 2022, so now I'm gonna go on to 2023. I doubt anyone's gonna watch this, but yeah, I'm bored and I want to. So
Alright folks, just a quick little video. This is the area I was watching on this morning, and we were waiting for PMI number to come out at 9:45, and I was expecting it to likely whip up into that and then look for a sell-off. And I tweeted about that this morning as a potential scenario. We were waiting for 9:45 news, not just simply waiting for 9:30 opening. This old high here, why this one is the highest one in the range from today's opening. Looking back, here you go. This is the first one you go to. That would be higher than this one. And before we get to this volume imbalance. So we're stuck essentially inside this range, waiting for it to come out of that. So we can obviously trade inside this range, as you watch me do today, but it takes a little bit more patience. So we can drop down into a 60-minute chart. All right, here is the 1 hour chart. You can see how we did not get up into that volume imbalance on the daily chart. We swept the buy side liquidity twice, once, twice, broke down, fair value gap, sell side liquidity, and the 30-minute fair value gap. So notice we have this big run here, but we drop down into a 30-minute chart. Now I use a 30-minute chart because you can clearly see that imbalance right there. So failure to get up above this high here and run for that. That's what we were waiting for. Confirmation one way or the other if it was going to run there. Not in a hurry to take a trade. First trading day of the year. Everybody's going to be wanting to get in there and do something right away. We have a fair value gap there. And you can see all those tweets were mentioned before the fact. And then I mentioned that we would draw down likely into this area here. So let's go into a 15-minute. Okay, and very clear 15-minute time frame fair value gap. Beautiful return into it, repricing, and then lower. Down to a nice.
whoa, that works like that? Wait, what? Yo, I need to screenshot this. I just dropped the AirPod. What the heck? Where'd it go? Anyway, guys, whoa. I didn't realize that. So the fair value gap gets back tested after we inverse it. I've never seen that before. Is that what a reclaimed fair value gap is? Anyway, wait, I'm gonna replay this part.
Mentioned that we would draw down likely into this area here. So let's go into a 15-minute. Okay, and very clear 15-minute time frame fair value gap. Beautiful return into it, repricing, and then lower. Down to a nice hard 30, 14 and a half. 5-minute chart.
I think that's what a reclaimed fair value gap is. We're gonna go on a tangent.
When you have a fair value gap and you have small little cracks in the delivery price like that little tiny volume imbalance right there, this tells you where the wick can go, but how can you trust the trade is still viable? Or if you miss this first run up here, can you trade it if it goes into it again in here? Yes, that's a reclaimed fair value gap. That's the fact that if it goes into it again in here. Yes, that's still viable. Or if you miss this first run up here, can you but how can you trust the trade is still viable? Or if you miss this first run up here, can you trade it if it goes into it again in here? Yes, that's a reclaimed fair value gap. That's the fact. How can you trust the trade is still viable? Or if you miss this first run up here, can you trade it if it goes into it again in here? Yes, that's a reclaimed fair value gap.
That's so interesting. So the fair value gap was already filled, and then it goes into it again, but the fair value gap has already been filled once. I'm gonna write this down. Reclaimed FVGs. So it looks like that. So when a FVG is filled and then it is filled again, what does he say specifically?
Can you trade it if it goes into it again in here? Yes. Viable, or if you miss this first run up here, can you trade it if it goes into it again in here? Yes, that's a wick can go, but how can you trust the trade is still viable? Or if you miss this first run up here, can you trade it if it goes into it again in here? Yes, that's a.
So when a fair value gap is filled and it's when a fair value gap is filled already once and then it is filled again after, the trade is still valid. I think that's what he's saying. Could be wrong.
Reclaimed fair value gap. That's the fact that the market's offering that again. It's reclaiming that fair value gap. But the wicks are doing the damage. So how can it run against you? How far can it run against you, Rob? Well, it can trade into that volume imbalance. But if it does both and it starts to slam down, you really are being like a billboard sign. Pull out on this exit here because we have the goods. It's a good thing to come this direction. When you have a fair value gap.
That's so interesting. So we can push into a fair value gap multiple times and have that same fair value gap still influencing price. Alright.
Again,
I don't know what this is then. Maybe inverse fair value gap retest. I don't know.
That is nice round. Okay, and very clear 15-minute time frame fair value gap. Beautiful return into it, repricing, and then lower down to a nice target 30, 14.5. 5-minute chart. Market trade above again where the buy side is. Nice round number 3900 there. Breaks lower. This low here, we're gonna look at that on a 1-minute chart. All right, on a 1-minute chart, you can see we had a run up into where buy side is. Market breaks down, takes out a swing low. Now, why do I like this low? And maybe something like this one, not so much. Well, you could have used this one here, where we went below it, right on that candle. Then we traded right up inside this imbalance there. That's more or less an institutional ortho entry drill. It breaks lower, really changes the market structure here and over here. So this is going to be a little bit more of a quality type setup. So the fair value gap in here, as it traded up into that, that's an expectation of lower prices because this is also a breaker. Bearish ICT breaker.
So sweep, that purple line is a sweep of liquidity. We break this low as seen by this orange line right here, and then we retest this fair value gap. And this confirms something that I was wondering, which is that does the fair value gap have to be at equilibrium or does it have to be in premium for it to be a valid 2022 model? And this confirms to me that it doesn't, because clearly that's not necessarily in premium. So I'm going to take some notes here. So fair value gap doesn't necessarily have to be in premium or equilibrium to be a valid 2022 model, I think. Let's go ahead and take a picture of this. Okay.
Okay, so inside this last down close candle, it's returning back up into, notice the bodies of the candle, they're respecting half of,
See this lowest down close candle is a breaker. I'm gonna take a picture of that. Okay.
so inside this last down close candle, it's returning back up into, notice the bodies of the candle, they're respecting half of that range, or the candle's high and low. That right there is mean threshold. Mean threshold is half of an order block. The market breaks lower, creates another imbalance. Fair value gap from this candle's high, that candle's low, and that shaded area in here, right there.
This may be the last ad you ever see, because with the free ad block extension from Capital One Shopping, you...
So I'm going to take these off as I talk about them because it's no longer important. And we have the up close candles here. Once we break through it, it's a bearish order block, an institutional order flow entry drill, and a fair value gap. So there's lots of confirmation for wanting to be a short seller here on this candle as we trade up into it and trade lower. Leaving that open, okay, leaving this range here open is what? Breakaway gap. Okay, the market trades lower into our fair value gap on the 15-minute time frame. It consolidates. I go short one more time and accelerates down into the 30-minute fair value gap here. And as we went down below it, limit order was filled, and then we retrace all the way back up to a perfect return to the 15-minute fair value gap. Look at the precision there. Now go back and look over here. Do you see any kind of classic support resistance there?
What is this called? What is it called when we... I'm just going to call it retest of an inversion for value gap. That's honestly the best way I can put it. Retest of an inversion for value gap.
That would justify that perfect precision right there? No. But the algorithm does, and it sees the fair value gap that I've outlined on the 15-minute time frame. That's real support and resistance, folks. The market trades lower, down into the low end of our 30-minute fair value gap. Beautiful delivery, and I more or less told you all to screenshot it on your own chart, not to simply take my charts, because that's a lazy person's approach to doing it, and you won't learn that way. You want to get in here and get comfortable marking your charts up. It takes a little bit of effort, it takes time, and it's important for you to be able to do it. And if you don't do it, if you don't like doing it, I promise you trading won't be a successful endeavor for you. You have to be involved. You have to do it yourself, and it requires a lot of effort on the part of the students. Market hangs around, works inside one more time, consequent encroachment, which is the middle of an imbalance. Mean threshold is the middle of a order block. Consequent encroachment is the middle of a gap, okay, or an inefficiency, like a fair value gap, buy side imbalance, sell side efficiency, or sell side imbalance, buy side efficiency. Either or, and just write that down because we'll build on that as we go forward in mentorship. But it goes halfway up into that and then clears the buy side, sell side below here, attack it, and run down to a really beautiful turning point at 30.14.5, and then now we've returned back up into that 30-minute fair value gap, and now consolidating in around and working the top end of that 30-minute fair value gap. So we'll be looking to see an eventual breakout of, not that I'm a breakout trader, but we want to see a breakout of that daily range before my interest is really peaked on any sustainable price run for analysis purposes. Otherwise, in layman's terms, in easy language, we have to be an intraday scalper until there's a higher time frame daily narrative at work. So that way, everything we look for is on a small time frame and not expecting big monster moves. All right, so we're watching price this morning, first trading day of the year. I went short on 2 fair value gaps and one at the top of the orange fair value gap at 38.60. Look for a continuation down into the levels I shared on Twitter. Initially, I thought that we would get 39.20 as a run-up aggressive run, as a Judas swing, like a fake rally aggressive. During the PMI numbers at 9:45, the market was not having that. So that's why I said we have to wait and see what the market does. It failed to run above the 39.05 level. So I waited for the shift in market structure at just below 38.72 and 3/4 73. And then return back into a fair value gap. You can see the entries on the left-hand side on that 1 minute chart. Broke down, traders again another short entry into the fair value gap and also bearish order block. And the third entry is at the top of the orange fair value gap at 38.60 as it traded up into that. Looking for heaviness going down into the 38.39 quarter level. So I took one partial, leaving 2 contracts on, and I want to get below that 38.42.50 level. That's where sell side is. You can see that noted on the right-hand side on the 30-minute chart. Now, why am I using the 30-minute chart? I want to see price remain below that fair value gap here on the left-hand side. If it goes above that, then I'll probably have to want to close the trade. So I'm thinking, but I want to see it remain heavy. Heavy means I want to see it go lower and have difficulty rallying higher. And if we trade down below 38.42.50, I will take one off. But rejecting that 39.20 level, I was expecting that daily volume balance up there, right-hand side chart, that upper orange level. That to me was a likelihood of a draw on the news driver. Okay, but I'll take another partial off here. And we'll see if it wants to go down and take that. I made a low-hanging fruit objective now. And we'll see if we get that.
That's so cool.
Here's how I eat low-carb, high-protein meals every day. These are my lunches this week. Eating carnivore or keto isn't cheap or fast, so I tried this with...
All right, folks, welcome back. We're looking at the NASDAQ 100.
That was pretty cool. I can't lie, that was pretty cool. So, I actually learned a lot from that really short video, I'm not even gonna lie. Like, one, you can retest an inversion for value gap, and that can be like a key level. 2, ICT really does use the 2022 model a lot, like the sweep break of structure for value gap entries, and honestly, my mind is definitely opening up to them. Like, I'm really starting to realize that these 2022 entries are actually really, really powerful, and I have to pay more attention to them, to be honest. Oh wow, we got Etsy here. Etsy, what's up, guys? And Haney too. What's up, guys? So yeah, it was a short video, but I actually got a lot out of it. I mean,
All right, folks.
specifically this being able to retest an inversion. Look at how perfectly we retest this inversion for value gap, and then we deliver lower. So anyway,
All right, folks, welcome back. We're looking at the NASDAQ 100 futures March delivery contract for 2023. This is our daily chart, and let's go right into the volume balance in here. And this is a level I had in mind for Wednesday's trading. I was expecting to trade up into that. Now it's the body close to body opening with this single pass through here. And what makes this a volume balance? Well, if you look at the low of this candle here, let me move this out of the way. This candle's low, that wick, and this candle's high, that wick, and this candle's wick. All of this price action in here was closed in simply with the wicks, no bodies. Okay, so because of that, my eye was drawn to that, and the algorithm will like to refer to those types of price points. Before we get any further, I know some of you are chomping at the bit for Forex commentary and such. More or less just keeping your attention until we get to February 7th, and as I mentioned, we will be doing daily analysis on euro dollar, pound dollar,
heck yeah,
dollar
I
index,
to go.
in addition to obviously the NASDAQ futures. And
I've never seen this yet, so yeah, there's a lot, but you know what? I've already watched all of 2022 now, so I don't know. There just seems like there's good stuff in here, so I'm gonna watch it.
Yes, in the S&P futures. I'm not going to do anything more than that. I'm not a crypto trader, so I have no interest in commenting on crypto. So I apologize if you've been waiting around for that. I don't really cover the asset class, if you will. All right, so with this in mind, I was anticipating a likely run up into this volume bounce. So when we see this shaded area here, that color, dropping down lower time frames, which we'll do now in the 60-minute. Okay, and before I get into it any further, there is something I want to bring to your attention because this is exactly what I teach my students. If you went through the content also on my YouTube channel for core content month 1 through 12, which is my premium mentorship core lessons, I teach and had taught and always have taught that my students should be only focusing on Monday, Tuesday, and Wednesday up to New York session for trading on non-farm payroll weeks. So non-farm payroll is the week, it's typically the first week of every month, and on that Friday, employment numbers come out. On Thursday and Friday of that week, it tends to be a little choppy, a little less likely to be as precise as one would expect or hope for. And the same thing occurs usually after New York session on Wednesday. So any position overnight from Tuesday into Wednesday, long and open, that would be favorable, but we usually try to square positions. But I forced myself into the environment today just to show you how the elements that I look for that are repeating in phenomenon that have precision.
So that's something interesting that is worth noting. I don't know if I agree with that, but I'm just going to write it down. Monday, Tuesday, Wednesday, leading into NFP are going to be the most precise. So I'm writing that down. Not sure I agree with that, but we'll just keep watching.
Signatures that give me high degree of accuracy and such, they don't pan out as precise as other days or weeks in the month. So you'll see some of those elements creep into this analysis in the trade review. So I've already posted a real quick vignette prior to this video, and I shared it on Twitter earlier as well, but this is going to be more or less me breaking it down. So if you want to know how to do this, it's not a enticement for you to trade on non-farm payroll weeks, Wednesday, Thursday, and Friday. It's to just draw your attention to the fact that this is why I teach my students this. I mean, look at the price action here. I mean, just look at it. We had FOMC today at 2 o'clock. So all this back and forth movement, it never even touched the volume balance. That's fine. It doesn't need to do that to be profitable. This is the level I'm looking for. So you could make the argument that, hey, look, you have this here, it traded up into that. Yeah, sure, it's fine.
Yeah, I'm taking notes on my phone. Like, I'm just taking notes in my notes app on my phone as I hear something interesting. Yeah, I think that's fine.
Some of those elements creep into this analysis in the trade review. So I've already posted a real quick vignette prior to this video, and I shared it on Twitter earlier as well, but this is going to be more or less me breaking it down. So if you want to know how to do this, it's not a enticement for you to trade on non-farm payroll weeks, Wednesday, Thursday, and Friday. It's to just draw your attention to the fact that this is why I teach my students this. I mean, look at the price action here. I mean, just look at it. We had FOMC today at 2 o'clock. So all this back and forth movement, it never even touched the volume balance. But that's fine. It doesn't need to do that to be profitable. This is the level I'm looking for. So you could make the argument that, hey, look, you have this here, it traded up into that. Yeah, sure, it's fine. But I'm looking for a higher time frame PD array to reach to. So while it did take out relatively equal highs here, as we'll see in the lower time frames, and you probably already watched in that little short video, it's not enough for me to feel satisfied in it. I'm always in a pursuit of precision. I'm always looking for elements of algorithmic price delivery that will be a step beyond the average retail analysis concepts. So we're going to look at this low here on the 3rd. And we're going to dive into this here, that fractal, that low. Inside this price action is going to give me insight about this low here, why I trusted going long there, and a run for the relative equal highs, and potentially run up into this area here. So if you are a Forex trader or a non-US trader, and you see this market here and you think to yourself, well, I can't trade that market because it's an American futures contract. You can trade the US 100. Okay, so Forex traders that have like MT4, which I don't use MT4, but I know a lot of you guys all around the world that are outside the US, and some of you that are in the US are trading in offshore brokers that, in my opinion, you shouldn't be doing that, but it's each their own. You are invited to go in and look at it, and we'll look at it briefly towards the end of the video as well. But for now, just know that the concepts I'm teaching you here are salient to those markets. So, for instance, if you're not a U.S. citizen and you want to trade these types of markets, while you may not be able to engage the actual futures contract because you're outside the States, you can trade for NASDAQ futures, like we're looking at this symbol here.
I didn't know that. You can't trade the actual contract if you're outside the States.
This symbol on TradingView would be NQH2023. That's for the futures contract in the U.S. market. If you're outside the U.S. and you're using an MT4 broker that has access to US 100, it's equivalent. It's not going to mark to market perfectly as you would see this, but you'll see later on it's close enough to operating. If you're going to be trading the ES in U.S. markets, obviously, American traders, we use the ESH2023. Right now it's the front month. It's March delivery. H in the name of the symbol on TradingView is correlated to the month of March. That's the delivery contract. When that expires, we'll be going to June, and that symbol is M. Okay, so if you're going to be using a MT4 or outside the U.S. broker, and you're trading like in a Forex type broker, and you want to do ES or S&P, the equivalent would be US 500. Okay, and while we're not going to look at that tonight, just know that you can go through and compare and contrast that on TradingView. Yes, you're going to need a real-time data. It's not terribly expensive, but you can procure that on TradingView, and I don't get a kickback for that. There's no relationship business-wise. There's no affiliate thing for me to get paid for recommending it. Okay, I'm just telling you what I use. It's inexpensive, and it's a very easy platform to work with, so I've had no complaints with it. So here we have the, if I'm not mistaken also, the US 100 and US 500 CFDs. While the US traders are not really particularly allowed to trade those, the futures contract is where we're supposed to be trading it. Those are real-time. But the futures market pricing, like for ES and or NQ, you have to pay for real-time exchange data. Okay, so it's not a lot of money. I think it's $5 per month, and it's really, in my opinion, it's rather inexpensive. But we're going to take a deep dive into this low here and focus on these relative equal highs and that volume imbalance. We have a framework here on the hourly chart. So let's drop down to 15. Okay, so you can see that low here and these relative equal highs, and then we have that run here that fell short, and we're going to again focus on this area in here. Already you can start to see there is a imbalance there, but we're going to fine tune that little area into the 5-minute chart.
Once again, we have another one of those reclaimed gaps where the fair value gap was already pushed into, but
and or NQ, you have to pay for real-time
we
exchange
still use it later.
data. Okay, so it's not a lot of money. I think it's $5 per month, and it's really, in my opinion, it's rather inexpensive. But we're going to take a deep dive into this low here and focus on these relative equal highs and that volume imbalance. We have a framework here on the hourly chart. So let's drop down to 15. Okay, so you can see that low here and these relative equal highs, and then we have that run here that fell short, and we're going to again focus on this area in here. Already you can start to see there is a imbalance there.
We
but we're going to
respect
fine
it,
tune that little area
and we respect
into
it again.
the 5-minute chart. Okay, so relative equal highs. And don't just use my charts or my analysis in lecture. You want to actually go into your charts, look at it yourself, find it on your charts. So 8 o'clock in the morning on January. And again, always, you're going to get sick and tired of saying this, but your trading view chart should always set to New York time. Okay, so that way you'll be able to find everything I'm referring to in my charts. So this low here is January 4th, Wednesday, 2023, on a 5-minute chart. If you scrub back over to the 3rd, Tuesday, January 2nd, January 3rd rather, you'll see that we have this down close candle, and we have this movement here in price. Okay, so that's a buy side imbalance, sell side inefficiency. But this low, this high of this candle here, this down close candle, prior to this move up, that's what I'm anchoring on for the price level of 10864.75. Okay, so if we look at that in relationship to the low, it pretty much nails that right there. That's not enough. That's where I was looking and had my initial interest in it. Now we're going to drop down to a 1-minute chart. And while we're talking, I want you to remember that I'm not limited to just the model that was taught on 2022 mentorship on this YouTube channel. So while it may be a little bit frustrating for some of you because I'm showing you things that are within the grasp of a student that studies the things that's on this channel, I'm not a one-trick pony. I'm not a one-model trader. I have lots of trading models, and these concepts are authored by me. So when I coded these things are at my disposal. I can reach and use them when and how I want to use them. So you as a student in the market and looking for utilization of these concepts, you're going to try to gravitate to what makes most sense to you. Okay, and when we're watching price in a few minutes, when we get into the actual replay of the real-time data, the video.
Break of structure, fair value gap, expansion, fair value gap, expansion, fair value gap, expansion. Every single fair value gap sponsors the next move higher. I wonder if ICT can trade. I know he's lost everything. He tried to make his money, of course, and his mentorships, but it's for real his models. So, well, have you ever seen a fair value gap work? Have you ever seen an inversion fair value gap work? Have you ever seen any ICT concept work? If the answer to that is yes, and ICT concepts work, then ICT knows how to trade and he's lying. Okay? It is that simple. If ICT concepts work, he is lying to you, pretending he doesn't know how to trade. He does. He knows how to trade. Fair value gaps work. Inversion fair value gaps work. Order blocks work. Every single ICT concept works. And he is lying for some reason. It's just so obvious to me. Like, fair value gaps obviously work. And if you can't tell if fair value gap works, then I don't know. I just can't help you. So I'm going to take a picture of this. So every fair value gap after the break of structure holds price and sponsors price to go higher. That's so interesting. So once we get this break of structure, literally every single fair value gap sponsors price here, sponsors price, and then we go to buy side. Oh yeah, bro. He's the master of messing around. He knows what he's doing. He 100% knows what he's doing. He enjoys the game. He thinks it's funny. And if anything, he wants his concepts to stay hidden. I mean, for some reason, he thinks it's funny that he's the only person that understands this stuff in a world that doesn't. And I don't know, he gets enjoyment out of it for some reason. I don't know. That's just what I think. Okay, I just wrote this down. Every fair value gap after a break of structure. It's so interesting because even when we get this break of structure, even the fair value gaps up here still support price. So
I showed the little tiny little vignette where I sped it up to like 2 minutes and some seconds or so. The little vignette that I had that sped up was like an hour and 20 minutes or so, compressed down inside of 2 minutes. Okay, so very, very quick replay of all of the actual executions, the annotations, and then now when I get done doing all this preamble here, we're going to walk through it again, but it's sped up to 44 minutes or thereabouts. Okay, so it's still a little bit lengthy, but it's about halfway or so. Okay, so it allows us to get through it without having to be every single second, which is going to be monotonous to do that. But if you're going to be with me in the live sessions, it's going to be very close to that, but longer. Okay, so as every individual 1 minute candle, as you see here, paints, the candle has to close, and then another one begins. Okay, so it's real easy to get tricked into thinking, oh, this is real easy to hold on to because it's a 1 minute chart and it's going to be fast market. It's still time. Okay, so time has to be paid, okay, with patience. And if you don't have that, or if you just think that you're going to watch the videos, and I'm seeing a lot of frustrations in the comments, which I also disabled, but forgot to turn it off for the little small little vignette. The only reason I put the vignette up is because I forgot to put my watermark on the video, and I shared it on Twitter, and a lot of folks like to go on Instagram.
Is a break of structure different than CISD? They're different, but very slightly. It's like almost the same thing. Here, let me show you. So I have a video on it, but it's essentially like the same thing, but it's very slightly different. If it'll load. Okay, really quickly, this is gonna not take hopefully that long. So, break of structure is any time we get a candle body close above the above a old wick. So, for instance, I'm trying to find a good example here. So this would be break of structure, right? Break of structure will occur when we close below the wick of the swing low, and change in state of delivery occurs when we close below the body. So you see the slight difference. So break of structure occurs when we close below the wick. Change state of delivery occurs when we close below the body. Okay.
Facebook and even re-upload the video on YouTube, and then I had it taken down because I don't want you to upload my videos. Okay, you don't have my permission to do that. So they pretend to be the person that took the trade if I don't hold a watermark on it. So that's the reason why I put watermarks on it. So
Imagine being able to build anything just by thinking about it. Meet Base 44.
So anyway, I'll give you all that extra charge. But I'd like to explain why I do things and why I don't do things. So we're going to go back inside that old low on the third. We're scrolling back, and you're going to see there is that buy side imbalance, sell side inefficiency, that single candle right here. I'll move it out of the way so you can see. And that down closed candle, which was in 5-minute chart, you can see that is what it's anchored on. So as I mentioned before, and you're going to see a lot of things not actually be in my chart because I'm working with 1 to 5-minute charts real time, showing that there's an algorithm. Yes, you can read it.
Mm-hmm.
Yes.
Yeah, breakup structure, market structure shift, interchangeable, essentially. There might be a small difference, but if it is, I don't know what it is. It's basically the same thing.
I'm getting a feel for where the market's going, but I'm not trying to absolutely mark up everything because, as a reminder, I only have the time to see, identify, calculate, process, envision what it is the algorithm is going to do next, all at the same time that 1-minute candle and 5-minute candle is painting. Okay, so in real time when we do our live sessions beginning on February 7th, I don't have the luxury of always typing things out, and I won't have to because you'll be sitting here with me, and I'll be able to talk about it audibly. Okay, so there will be witnesses here, they'll be able to say, I was here, I saw that. And not that I need that, okay, but the public, likes to see those types of things when they come to a venue or an educator, after the fact. It just seems, if you look at the examples, it looks too good to be true. And I appreciate those compliments, and I take that as a compliment when I see people doubting it. But I don't want you to think that I'm going to be doing this for you when we're doing live sessions, because it's not going to be like that at all. It's going to be me pointing where the market's likely to go. And then I'll comment on what I see in price, but I will not be pushing a button in front of you. Okay, so when we do the live walk through, not live walk through, but the replay of me actually executing, I'll kind of comment pretty much like you'll expect to see me do when we're doing live streams. Okay, so hopefully it'll make a little bit better sense as to what you should be expecting when you start in February. So we have a buy side imbalance, sell side efficiency. Okay, yes, we went down, but we left a small portion open, so that means it's always a candidate to come back and revisit that area. If it overshoots it, that's fine. We're blocking the 5-minute chart is always a possibility. Okay, so we traded down into it, completely closed and hit the overbought. And then we had consolidation. And then we entered into the 10:30 to 11 o'clock time window. And we dropped down initially, right at 9:30 opening. Where are we at? 9:30. Right there. So at 9:30, we had sell stops below here. It tagged those, came back up to the buy side, buy stops here. And then notice they left these relative equal highs open. Now, the reason why I'm keeping all these notes here is because I want you to see that this is the actual chart that was annotated real time while I was executing and managing the trade. So while it is a little too busy here, I'll clean it up and get to the need for doing so. But right now, it needs to be there for context. So we left buy side liquidity, that's buy stops, above these relative equal highs. Now, traders are taught that this is resistance. So therefore, lower prices should be expected. And we did. We had lower prices, but down to a level of a discount. And my expectation, much like I was sharing with the ES, there's this daily volume imbalance up here in that shaded area. So I thought that was a draw on liquidity. So that means what? Even though we had movement lower at 9:30, going into 10 o'clock hour, it's going down to go up. And because it's FOMC, and it's also the non-farm payroll week conditions, now I say week, not W-E-A-K, W-E-E-K, the week, Monday through Friday, because it's non-farm payroll week, that tendency to be sloppy in price delivery. It's not as precise. Targets won't really get filled perfectly, or maybe not even get touched at all. I'm going to show you how the US 100 for non-US traders actually went to its daily volume imbalance. So it'll be hopefully an encouragement for you to study real time using the US 100. So you don't necessarily have to have real time data. And I'm taking the liberty based on what I believe. I don't know. I'm almost certain that US 100, US 500, US 30 was just going down. I don't trade Dow futures, but I use it for analysis, and you'll see me doing that in more examples as we go forward, and also in the live stream. So you'll see how I pull up those charts and kind of show you real time S&P divergence and relative strength analysis, and not the RSI indicator either. Okay, so when we're looking at a market that's likely to go up, and my belief was we were likely to go up into that volume imbalance, as I mentioned yesterday, with a potential draw if we continue to go higher. If we see the market drop like this into a deep discount, it's likely to go higher and attack number one, the buy side here. If it's going to go above here, it might just go all the way up into that daily volume imbalance, that shaded area up here. Okay, so with that in mind, let's look at how the market dove into that 1 minute fair value gap in the form of a buy side imbalance or some efficiency. And if these terms are confusing to you, I promise the more time you spend with me and see opportunities repeating with the use of them, it will become secondhand nature to you to understand what it is I'm referring to. Like anything else.
I think that's the realest thing. Like, you might not understand everything, but like as you just listen to him talk, eventually it just kind of like slowly just, you know, starts to become more familiar.
Which is difficult, but you'll see by repetition over and over again, these things are they're easy to pick up. Don't quit. Okay, I promise it's worth it. Stick with it. So we trade down into the order block, we trade down into the BISI 570 efficiency, which is a form of fair value gap. It rallies up, consolidates, and then we dive one more time below short-term low, and then we run above the short-term high. Okay, so that is what? That's a shift in market structure while it's in discount. Okay, it left this fair value gap right there. Okay, so this fair value gap, let me take off so we can see it. That one candle right here, that's your fair value gap. So inside of that. And the way I did that is click on it, highlight it, hit the delete key, it takes off. And then when we went back, just hold down Control and Tab Z. Okay, so I'll do that in case you want to know. And then the market ran away above this fair value gap. And I mentioned that I wanted to see price stay above that, and it would not go back below that. It's not needed to. Okay, and I'll get into that when we're doing the live walkthrough of the trade execution and management. But I want to cover why I chose the NASDAQ today versus the ES. So if you probably noticed this down here, okay, it's a real secret indicator. Now, only the best hedge fund traders, market makers, the elites, the folks that pull the strings to make the markets go up and down, they have this indicator down here on their charts.
Wait, what? Wait, I want to know what this indicator is. Yo, wait a second. What the heck? Wait. It's just it's just the most random stuff that he says 20 minutes into the video that you're just like, what?
Only the best hedge fund traders, market makers, the elites, the folks that pull the strings to make the markets go up and down, they have this indicator down here on their charts.
I'm going to record this.
Hedge fund traders, market makers, the elites, the folks that pull the strings to make the markets go up and down, they have this indicator down here on their charts. I know it's hard to believe, right? It's hard to believe. No, I'm just being facetious. If you look at this, and we're going to add the use of the ES. Okay, so all I did was compare. And if you're using TradingView, up in the upper left-hand corner here,
he's just
you can see
trying
like a
to be
little
funny. He's just saying if you have the S&P pulled up at the same time.
Symbol.
I think.
If you click on that, that's your compare utility. You just type in ESH2023, and it'll plot over, well, you got to click new pane, P-A-N-E, and then it'll plot below the instrument you have open. Since we're talking about NASDAQ, which is NQH2023 for the symbol in TradingView. You would be
He's
down
just
here
trying
for
to be
non-US.
funny. It's just I think he's just saying, like, if you use the S&P and you compare it with the NASDAQ, so his indicator that he's talking about is literally just the S&P. He's just trying to be funny.
Students, you can be utilizing the US 100 up here, and then hitting the compare feature up here has like a little plus symbol on TradingView up in this area. Look up on when you're doing your own. Pause the video if you want to check and see what I'm talking about. And then you would do, to get the overlay like this down here for ES non-US market, the CFD for US 500. And then it's going to apply it as a line chart, and you click over here, gear, and where it says inputs, style, you're going to be doing candlesticks. Okay, and address them as you see here. It's going to come up as a default one line. You don't want that. You want the candlesticks. Okay, so you can compare and contrast for S&P divergence. Now, with a vertical line, everything germane with this low, they match. All right, we drop a vertical line on the chart here. I'm picking that up and darkening that for you. Okay, so this is our reference point. So wherever I drag this, it should have matching highs and matching lows. Okay. Now watch what happens when I drag to the right, going forward in time. Okay, right there we have this high higher than that high. Slightly higher than that high. See that? ES is not showing the strength to the upside that NASDAQ is here. So keep marching forward, going forward, and right there, we can see that this high and this high, NASDAQ is lower, but ES is higher. Doesn't mean anything yet. Watch what happens. We have now this short-term high that's been taken out by this high. This high is this high here for NQ. Okay, so NASDAQ's high is here on the 1 minute chart, and ES's 1 minute chart high is here. Over here, look what we have. We have relative equal highs. See that? But we have a stronger, higher punch through by NQ. So NASDAQ was higher here. After, here's the key point, a short-term high was taken, and then a fair value gap was left. Okay, after digging into this 1 minute buy side and sell side efficiency or gap, okay, and we expect the market to turn here. So we have relative strength analysis on our side that NQ.
Yeah, well, the craziest part is this is just the 2023 mentorship. If you go on his entire YouTube channel, check this out. ICT has 755 videos. That's crazy. Like 1/7 or 1/8 of them are the 2023 mentorship. It's kind of crazy.
Or NASDAQ futures was the better buy. And again, why? The short-term high here is much more prominent of a break here than it is here. These are relatively flat. This, I'm looking for the relative strength leader. One that wants to break out higher, faster, stronger. Okay, and while they both pretty much moved in sympathy with one another, the more sharper technical picture was seen in NASDAQ. Notice that there is a small little gap here. Very small. Let me zoom in here without messing up into the relationship between the two. There's a small little gap right there, but look how sloppy it is. See how it completely goes down below it? We don't have that here on NASDAQ. Okay, we don't see that. Why didn't we see it? Because it's stronger on NASDAQ. NASDAQ had much more relative strength comparatively to that of the ES, even the S&P. So I'm going to trust this one because visually I can see that fair value gap. It's much more prominent here versus the very lethargic looking fair value gap down here. This one's much more energetic. It's much more obvious, and it is also with a market that's moving more explosive to the upside. Okay, so I'm going to be in this market buying this fair value gap right there and trusting that it will not completely close in. Why? Because we want this to act as what? A breakaway gap. Why should it be a breakaway gap? Because we've already traded down into this 1 minute fair value gap in the form of buy side and sell side efficiency. Real quick for your notes, if you see a candle that's moving like this one way and it's going up like this, so from low to high, it's up close candle, and it's one single pass like that, and it creates a fair value gap, that fair value gap is labeled a buy side and sell side efficiency, BISI, okay, BISI. If the candle opens and trades down,
what would you say to somebody that hasn't tried therapy before?
Just ask yourself if what you're doing in your life right now is working. If you
and creates a fair value gap, that one single candle or fair value gap is labeled and categorized as a SIBI.
Why does he have to overcomplicate everything? A bearish fair value gap is a SIBI. A bullish fair value gap is a BISI. Stop with this overcomplication. Like, it is not that complicated. Bullish fair value gap BISI, bearish SIBI. Bro, why does he feel the need to complicate it so much?
SIBI, sell side imbalance, buy side inefficiency. Okay, so that way you know now for your notes, that's what you should be having in there. BISIs for bought, for longs, or traded to as targets when short. SIBIs are sold short or targeted from longs. Okay, so that's how you want to use them interchangeably. Okay, and we'll talk a little bit more as we go throughout this year, but for now, that's enough for your notes for this one. So the market rallies from here and trades into, I'm going to take this ES off now, okay, so we've accomplished what it is that we need to have in terms of insight from it. Let's scroll this over. And the market trades down into this fair value gap here, and then leaving this range right there, you'll see that that's drawn, and I talk about how it's not going to go back below that. The algorithm will not reprice back below that. Why? Because this, in this area here, becomes a balanced price range.
Yo, and look at how this fair value gap, this inverse fair value gap gets reused. If you drag this over. Inverse fair value gap's getting reused, honestly, is a concept that I need to pay attention to more because I think I've been sleeping on it.
One single pass, and a fair value gap. So it's going to work in this one, and then accumulate new long positions.
Yo, Medbach, what's up, bro? Yeah, this is just a chill study session. I'm going to be here for a while because I'm bored, and I don't know. I just feel like I'm not where I want to be, and I'm just going to keep studying and keep learning. Plus, I need content to make for my short-form videos, so anything that I learn, I'll put into a short-form video.
I even talk about how this area here with this fair value gap, I'm going to draw it again, like this. They had stated that you would see this form support. I typed it out and you'll see.
Yo, I was just talking about that. I was just talking about that. The inverse fair value gaps are nice to use as a confluence when back tested. That's actually really nice to know. Like, look at how we inverse it. We back test it. Whenever you back test an inverse fair value gap, it's honestly, it's pretty nice.
Do it again as I did it. And the only thing I was incorrect about, and this is typical of FOMC and also non-farm payroll weeks, where my precision is just a little bit skewed. This low right there, I looked at it as a potential to create an institutional order flow entry trail, which is just a small little movement into a fair value gap that doesn't completely close it in, and you can buy high frequency trading algorithms use that as a entry model. And it's too broad of a topic to try to cover inside of this. I'll mention it in passing when we're watching real-time data in the live sessions throughout this year. Just know that it is a partial entry into a fair value gap that will not even go halfway. Okay, it's just like small little entry into it and then picks up orders. And
did you hear that? Good night, bro. Good night, Sandro. Hope you have a good one. It's kind of crazy you watched this so far. This is a lot. But that's cool that you did. Good night, bro. Talk to you more whenever you're on the stream next. But listen to this. This is interesting.
It's too broad of a topic to try to cover inside of this. I'll mention it in passing when we're watching real-time data in the live sessions throughout this year. Just know that it is a partial entry into a fair value gap that will not even go halfway. Okay, it's just
an institutional order.
It's like small little entry into it and then picks up orders in rooms. Okay, so that's basically all it is. So it's an entry into a fair value gap, but not even the halfway movement of it. And you see the market does in fact create support here. It rallies. I anchor to this down close candle. It's open price. Draw that in time. Anticipate a order block forming. Find some support. Creates a small little gap in here. This is a measuring gap. So we had a breakaway gap down here, and this is a measuring gap. So from this long to this point here, that's essentially half of the move. And then we have buy side up here. So we can target the bulk of our exits just above this high here because we have a confirmation that this isn't getting filled in. And you've already seen several examples of me doing this. This is how you determine and classify real time.
Hello traders. In this video, we'll walk you through our new AI analysis tools, show you how to access these powerful
a measuring gap.